Hi, this is Bob Daves with some economic news. The jobs report is out for the month of March, and it says a strong U.S. jobs report unlikely to sway a cautious Fed. And it was on Reuters this morning. Robert Galbraith wrote the article. He said U.S. unemployment increased solidly in March and wages rebounded, underscoring the economy's resilience. Non-farm payroll jobs increased 215,000 last month, and the data for January and February was revised down a little bit, which is nothing unusual, to show 1,000 fewer jobs than was previously reported. The average hourly wage earning increased 7 cents, while the unemployment rate rose to 5% from an 8-year low of 4.9%. It's because more Americans are returning to the labor force as a sign of a confidence in the job market. The labor market has largely struggled off since the global slowing economic growth. A robust U.S. dollar has hurt manufacturing exports and cheap oil, which has hit the energy sector's profitability. The March strong employment report has little impact on the monetary policy for the Fed for the near future. Economists that had been polled by Reuters had forecasted the non-farm payroll to increase to 205,000 in March and the unemployment rate to hold steady at 4.9%. The U.S. Treasury's price fell after the data, as did the short-term interest rate futures, the dollar against the basket of currencies, while the U.S. stock index futures slightly paired losses. The employment report came on the heels of recent data showing a sluggish consumer spending and a weakening business investment on capital in the first couple of months of the year, as well as some deterioration in the international trade balance. Those reports prompted economists to slash the first quarter GDP growth estimates to as low as 0.9% annualized pace from as high as a 2.0% rate. The economy grew at a 1.4% rate in the fourth quarter. It says that wages are bouncing back. Through employment gains have slowed, averaging 282,000 jobs per month in the fourth quarter of last year. There's little labor market strain from the global slowdown, which helped ignite a massive stock sell-off at the beginning of the year. Wages increased last month, with the average hourly earning rising 0.3%. That lifted the year-on-year earnings gain to 2.3% from 2.2% in February. Economists say the wage growth between 3%, 3.5% is needed to lift inflation to the Fed's target 2.0. Though the Fed preferred inflation measure is currently 1.7%. The labor force participation rate, that's how many folks are trying to get a job. That's the share of working age Americans who are employed or at least looking for a job, rose 0.1% to 63%, the highest level since March of 2014. That increase of 0.6% since the dip to 62.4% in September. Broader measure of the unemployment that includes people who want to work but have kind of given up searching, and those working part-time because they can't find full-time employment, rose to 9.8% last month from a more than 7.5-year low of 9.7%. If you really take in a lot of factors of people that are underemployed, unemployed, and plus taking a look at people who are having to work 2 or 3 jobs, it's astronomical what the actual percentage is. It's up toward 20%. Meanwhile, mining purged 12,000 jobs last month. Mining payroll has declined 185,000 jobs since the peak in September of 2014, with 3/4 of those lost in support activities. Oilfield services like Schlumberger and Halliburton have announced thousands of job cuts as they try to cope with reduced profits from the prolonged slump in oil prices. Construction payrolls have risen 37,000. That's the 9th straight month of increase. Retail employment surged 47,700 jobs after strongly rising in January and February despite weak sales. Government payroll increased 20,000 jobs last month. It's not a good picture out there. There's some sectors that are rising, but there's going to be a lot more changes, so you need to be prepared. The middle class is struggling, and they're going to struggle more as the economy grows on. So if you're waiting for Washington to fix your economy. I'm sorry to tell you this. It's not going to happen. The only person that can fix your economy is you. And that's the fact. I'm Bob Davis with the Job Picture. Stay tuned. We'll keep you up to date as we get more news in.